You turn on the news, right? And you're just bombarded with these super alarming headlines about global tension. But then you look at the financial markets, and they seem to be just shrugging it all off. It's a huge puzzle, and honestly, it can be pretty confusing. So what is really going on behind the scenes? Well, let's get into it.
This is the big question we're going to try and unpack today. I mean, on one hand, you've got this intense conflict just dominating the news cycle. And on the other hand, a surprisingly stable, almost quiet market. How can these two things even exist at the same time? Let's break it down.
Okay, so first up, let's look past those dramatic headlines for a second and see how the really seasoned market players are reading the situation. Trust me, it's a totally different perspective than what you might think.
So here's the split screen. On one side, you have the constant barrage of headline anxiety, stuff that makes all of us feel on edge. But on the other side, you've got the market's actual behavior, and it's just calm, stable, moving sideways. It kind of feels like the market knows something we don't, right?
I mean, just look at this. The S&P 500 has been stuck in this incredibly tight trading range. This lack of big swings, this lack of volatility, it's a huge signal that the major investors, the big money, they aren't panicking. They're not selling off in fear of a total collapse because they see something else entirely. They see the headlines as just noise. The market is basically interpreting all this public drama as noise. It's seen as a kind of high-stakes negotiation, almost like theater, you know? It's designed for us, for public consumption, and for political posturing, not as a real signal of an impending economic disaster. The real deals, it seems, are happening behind closed doors.
Okay, now let's talk about the elephant in the room, oil. For decades, a big spike in oil prices has been a classic, almost guaranteed trigger for a global recession. But is that still true today?
This is the question that keeps economists and world leaders up at night. The fear is simple. Expensive energy cripples everything, from consumer spending to business investment, and it just grinds the economy to a halt. But the reality now is, well, it's a lot more complicated.
So, reason number one, we have to talk about inflation. A dollar today just doesn't buy what it used to, not even close to what it bought in 2008 or even 2022. So while the price of oil might look high on paper, its real inflation-adjusted impact is actually a lot less painful than it was in past crises.
And then there's this huge structural shift in our economies. We're just far, far more energy efficient now. The amount of oil it takes to produce $1 of economic output has dropped like a rock over the last couple of decades. That makes our entire economy way more resilient to these price shocks.
But here's the real game changer, especially for the world's biggest economy. The United States is now a dominant oil exporter. So yeah, while high prices hurt us at the gas pump, they create this enormous river of revenue for a huge part of the U.S. economy. It is absolutely not a one-way street anymore.
In fact, you could say the U.S. economy gets a kind of double boost from this. First, you've got this massive influx of cash from selling its oil in the global market at these higher prices. And second, the conflict itself is driving a huge increase in defense spending to rebuild stockpiles of advanced weapons, which of course acts as a really powerful economic stimulus.
All right, so the markets are calm. The U.S. economy has this built-in buffer. So who's really benefiting from all this distraction and chaos? The answer, I think, is probably going to surprise you.
Just think about it for a second. While all eyes are on the direct fight, another major power is operating silently in the background. They're not firing a single shot, but they're pulling strings in a way that gives them incredible leverage over everyone involved. And here it is. This is the hidden architecture of the entire conflict. China is supplying the critical high-temperature magnets that Israel absolutely needs for its missile interceptors. At the same time, it's also supplying the processed magnets for most of America's interception systems. And at the same time, it provides Iran with missile guidance systems, electronics, even satellite imagery. All three sides depend on the same supplier. What this creates is a situation known as strategic dependency. It is an unbelievably powerful position to be in. See, as the other powers use up their weapons, China's influence just grows and grows, with every missile fired and every interceptor launched. It's gaining more and more control without ever having to enter the fight. So let's pull all these threads together. When you understand these hidden dynamics, it gives you a whole new framework for analyzing not just this conflict, but any major global event and how it actually impacts the markets.
So here's your new toolkit for thinking about this stuff. First, you have to look past the noise of the headlines. Second, follow the real money. Find out where it's actually flowing to understand the true economic impact. And third, and this might be the most important one, always look for the quiet players.
the ones who are gaining influence while everyone else is distracted. And this leaves us with one last thought. If this is the reality hiding behind just one major headline, what other powerful, unseen forces are shaping our markets and our world right now? So the next time you see a headline that makes you anxious, just remember to look for the hidden players and the real story. Thanks for tuning in.